Welcome back to Sovereign Ratio. With the Bitcoin and cryptocurrency halving coming up in the next 30 days, I think it's extremely important for me to give the audience a realistic view on some things that you could do that would cause you to fail in this bull market. We all know that about 90% of crypto investors don't actually become profitable. It's only the top 10% of crypto investors that do their research and understand how the market works that succeed in the bull run and end up making life-changing wealth. Today, I'm going to give you some lessons that I learned from the previous bull run and things to look out for that could perhaps make you successful in the next bull run. If you're new here, please hit the subscribe button, the like button, and leave me a comment below. So the first thing that you can do to set yourself up for failure is to follow influencers on YouTube and X too closely instead of forming your own game plan and using their information as tertiary information. I made a separate video about this a few months ago, and I want to reemphasize this point. A lot of influencers are very personable people, they're very likable people, and they're people that can coerce you into doing, buying, and selling at times that are beneficial for them as an influencer. Now, I want to be very clear. I don't think that every single influencer is a bad apple, but what I do think is about 80% of them are really trying to either get clicks out of you or get you to like and subscribe so they can make money on their YouTube channel, or they're trying to coerce you into buying and selling at the wrong times, simply because I've seen it happen way too much and I've been victim of it myself. I lost an incredible amount of money at one point because I listened to an influencer tell me to buy every single day on the way down out of a bull market. And I've since put in like 4,000 hours into the market, learning how to better treat it and how to better play it, so I don't fall into the category of somebody that needs to listen to another influencer in order to determine how to best play the market. There are a lot of data points and a lot of things that I've illustrated many times on this channel in the last year or so on how you can be self-sufficient looking at TA and using data in the market to make decisions. Influencers in general are not somebody that you want to base investment decisions off of. Now me, am I trying to be an influencer or whatever you want to call it? Yes, but I'm also one of those ones that I don't care about taking your funds. I don't care about making you buy and sell at the right times. I want you to succeed. I really do. And every day that I make a video on this channel, sometimes it's hard to do, sometimes it's easy to do. But at the end of the day, I really want people to succeed because I failed listening to influencers and I do not want that happen to somebody else. In fact, because a lot of these influencers have copyrights on their channel names and things like that, I'm not directly stating their names. But what I am doing is changing my YouTube screen between all of these different cuts of the video so you can see some of the people that I'm talking about that could potentially lead you in the wrong direction. This one in particular that I have pulled up right now is the one that I listened to that caused me to lose in upwards of $500,000 in the last bull run, because on the way down from the top, they kept saying buy every week, and I trusted them. I thought they were a reputable source of information. So every time they said buy altcoins, I bought altcoins, and it just kept going down and down and down. And I eventually became victim of the capitulation phase because I had not done enough research and work into the market prior to that to understand what was actually happening. Now, some of these channels will take various narratives. Some of them will never have a bearish day in crypto. You'll see that regardless of what crypto does, it could fall 20%. It's still a bullish day in crypto. That's a telltale sign whenever there's not any polarity between opinions. Generally, a channel should give you both a good and a bad point of view, whether the good be bearish or the good be bullish. A channel should give you both points of view, or at least say, hey, this isn't guaranteed. I don't know what's going to happen. This is my opinion, but it could also go the other direction. It's very important that a channel give you both versions of that. And that's a good identification tool to use to know that you're at least dealing with somebody or an influencer that cares about you in general, because the influencers that don't care about you will sell you on the idea that something is going to go one direction and not give a counter opinion. Or they will have an opinion one day, and then the next day they will have the literal opposite opinion of that. And you can see that across many channels just looking at the thumbnails. One day the thumbnail will be full of green and say and have like some sort of bullish narrative, and the next day the thumbnail will be red and have some like doomsday narrative. And it's going back and forth and back and forth and back and forth. And what this is meant to do is to confuse you and get you into a state of perpetual confusion where you don't really know what to do and are making emotional decisions. What you need to do is to form a game plan with real information, real data, real TA, and say, okay, this is my plan, I'm sticking to it, and that's the only way that I'm going to handle this market. I'm also not saying that influencer channels aren't useless. There are a lot of influencer channels that if you simply tune in to get maybe altcoin picks, as far as what projects are promising for the next bull, sometimes you can get that from the same channels that you would consider ones that are also trying to manipulate you into buying or selling. If you just focus on the coins themselves that people are presenting rather than what they're telling you to do as far as buy times and sell times, that's actually something that's very beneficial. For example, the channel that I have pulled up right now has given some fantastic calls in the gaming space, one of which is Echelon Prime, is actually just going through the roof right now. If you would have listened to this person and bought some of the gaming tokens that they had mentioned previously, at the times that they mentioned them, they were actually very accurate on the time as well. You would be up 10, 20x on some of these things right now. So it's not that all influencers are bad. It's the ones that continually flip back and forth and try to manipulate you into buying and selling every single day, making emotional decisions that are actually the bad apples. Some of them, like this account that I have pulled up here, gives quality information from time to time, even though this particular one is focused only on the gaming space. There are other channels available for like DeFi, layer ones, so on and so forth. But the most important thing is that you do your research into these channels and you do your research into the charts instead of just trusting what they say. Now, I want to mention this also applies to crypto Twitter. Whenever you're seeing whether it's an influencer or somebody just commenting on an influencer account or something, you cannot take too much stock into what people are saying on crypto Twitter. Because if you go on crypto Twitter, especially in the last month or so, it's just straight bullishness. There are people that literally have no idea what they're talking about when it comes to TA or whatever, that just say up only, up only. It's this really bandwagon approach coming from a pulpit of knowledge that does not know really what they're talking about. And I'm going to give you an example of that. Here's a post that I made talking about the Pi Cycle long moving average. I pinned it to the top of my profile. And the reason that I did that is because I made a call earlier this year about the golden 618 rejection, where Bitcoin should reject somewhere between 48 and 49,000 because it has done so in every other cycle. After that failed, I went back and did reanalysis on the charts and determined that what we were actually rejecting off of the entire time is the Pi Cycle long moving average. And if you go back and look at this post, you can see that it's actually quite accurate. The 2016 pre-halving, we rejected off the Pi Cycle indicator. The 2020 halving, before that, we rejected off the Pi Cycle indicator. And then right now, in this current cycle, we were rejecting off the Pi Cycle indicator. And now Bitcoin is actually rejected off of that and is down in the $63,000 area. And what you'll see is there are people, it doesn't matter who you are, it doesn't matter how trustworthy you are, it doesn't matter how good of information you're trying to give to people with complete honesty, there are people that will still try to talk you down, like this person here. His name's Satoshi Glakamoto. He commented on my post. So if that doesn't hold up, what's the next bearish propaganda? Because this is a person that's just up only, probably doesn't know jack shit about TA. But you will find people on CT constantly that have no clue what they're talking about, but will literally insult you or try to make you feel bad for having a narrative that isn't in alignment with the masses. Just because the masses are doing something doesn't mean that it's right. Okay, so if everybody's screaming bullishness, what I would be more inclined to do is to say, okay, maybe there's a pullback coming, and that's what we're seeing right now. I'm not trying to brag about that because my whole goal with this channel is to make sure that people don't fall into these traps. Second mistake that you can make to not secure profits in the bear market is simply not taking profits on the way up or at the correct times. Now, I want to start off by saying absolutely no one can predict what's going to happen in a market because it's unknown. What we can look at is previous data. But what's challenging in this cycle is that previous data is already starting to fail us to an extent because Bitcoin has already made a new all-time high prior to the halving in April, which has never happened before. So there's a lot of questions right now is the cycle completely broken? Well, nobody knows because we can't see anything past this point right here on the chart, right? We know that the halving is coming up somewhere in the middle of April 2024. The only thing that we have to go off of is previous halvings, which are currently marked here on the chart in the vertical dotted line around May 11th, 2020, and then another one back here around July 11th, 2016. What I can tell you about both of those halvings is that the cycle top, the point to get out of the market, was exactly 1,064 days after the low of the previous bear market. So if we've got the halving here, the low of the previous bear market was right here where this starts. You can see this blue line here on the chart, and it was exactly 1,064 days until the top. That same thing applies to the previous cycle as well, even though I don't have it drawn on the chart. Another thing that's always happened is that 365 days after the halving, there's been a major pullback. And you can see that right here. If I extend this candle from the halving line until when this major pullback happened here in 2021, it was 364 days, so a year exactly. And the same thing happened in the previous cycle. There was a major pullback 365 days after the halving. Now, is that guaranteed to happen this time? Absolutely not, because we're already seeing structure being broken with the new all-time high prior to the halving. The one thing that has not broken yet is what I just mentioned before, which is the pi cycle long moving average. Again, the picture that I showed a little bit ago was 2 weeks ago back here when it was at this candle. Now we've seen a clear rejection off of it. And that is something that is at least holding up this cycle. Now, does that mean that 365 days after the halving, we're going to have a major pullback? I have no idea. But what I can tell you is that's what data has given me in the past, and that's kind of what I'm going to use going forward. But that's not the only thing to use when trying to make decisions like this. So the best plan is if you're in the market or you're looking to get in the market, just take profits on the way up. Maybe take 5% 1 week, and then a couple weeks later, take another 5%. And then a couple weeks later, take another 5%. And then once we slowly get to the point to where it's been, we're a year into this bull market, anytime you take profit, maybe take 10% or maybe take 15% until you're out of the market, because there's no way to time this thing. Nobody knows what's going to happen. And it's better to be taking profits on the way up and then be completely out of the market on the way down than it is to actually be taking profits on the way down out of the bull market, trying to figure out what's what and being in a state of emotional decision making. So number 2, again, take profits regularly at set intervals on a plan that you've established and don't deviate from that. The third thing not to do in this bull market in order to succeed is don't trade too much, trying to sell at highs and buy back at lows to compound your gains. I'm saving this one for last because this is absolutely the one where I would fail most miserably, is trying to compound gains. For me, I'm a technical analyst, and when I see something, I'm going to show you an example actually of Cardano chart from the last bull market. Again, I'm not a Cardano fan, but the chart is perfect in many ways to illustrate many different forms of TA and just many different things overall because of the volatility that it had in the last cycle. So if we look at this Cardano chart back here in, let's say, February of 2021, right here we have an extremely overextended RSI at the level of 98, with the ultimate stochastic showing 2 drives of bearish divergence and also a curve down of K and D. If there was anything in the world, especially on a weekly chart, that would tell me to sell, it's all of that combined. Now, there are some other things that you can look at too, as far as like the fear and greed index and some other indicators that I have that are not currently pulled up on this chart. There are a lot of things you can look at, but those 2 things alone would be enough for me to go, okay, I've got to get out. The absolute biggest mistake you could have made here on Cardano is selling your entire bag based off of those indicators. This is why that progressive profit taking strategy is important, because if you took all of your profit right here when those indicators fired off, you would have missed all of these gains right here, because that was, the best case scenario there was $1.48. Cardano then had very little down movement and then rocketed up to $2.46 before having another downward movement and then rocketing up to $3.10. So in this case, it may have been better to trade off of smaller time frames, but regardless, the best strategy here would be to simply take profits at various levels. So maybe here you take 10%, and then here you take 10%, and then here you take 10%, and then here you take 20%, and then here you take 20%, and do that on the way up, so that way you're DCAing out of the market, making sure that you can be as profitable as you can, while at the same time not putting yourself at a huge risk. The other beautiful thing about this strategy is the inevitability that there's going to be new coins that develop hot narratives at different points in the bull market. So here's an example here. We can see that Cardano had a major peak here in May of 2021. right? Let's say at that point you would take in 30% profit. Just an example. Maybe you took profit three times, maybe 4 times, somewhere between 30 and 40%, just as a random example. So you've got that 30 or 40% in cash or USDT or USDC or whatever ready to deploy, right? Well, let's say sometime a little bit later, there's another new hot narrative that comes up on a coin that's brand new and hasn't run at all, which inevitably will happen during the next bull run. Well, I'm going to show you an example of that again. So let's keep that date in mind, May 10th, 2021. And let's go over here to the cycle list and pull up the Solana chart. So if I can find, actually I need an older Solana chart than the Coinbase. So we will grab the Solana chart off of Binance, which is, I'm sure, much bigger. Right. So look when Solana started to run. Solana started to run in July of 2021, and it did a gain of approximately 1,083%. So July 2021. Okay, now let's go back to ADA, which we have here. And that dip happened in July of 2021. So you have, let's imagine you have this 30 or 40% in cash that you've taken profit on Cardano. If you determine that that new narrative is Solana, you could easily put that cash in Solana, and then now your 30% is compounded on a 10x on top of that 30%, which is fantastic. So really the way to play the market is not to try to compound gains by buying and selling the same token, but it's more of shifting narratives, right? So if you take profit, you're done. Don't do anything with that. Don't buy more ADA, whatever. If you have some ADA left, let it run, see where it goes, whatever. But you take that profit into other coins that haven't run yet, and that's a really, really solid way of compounding gains. So right now, we're about a month out of the halving. Hopefully you've secured your positions. If not, hopefully you have limit orders set for the things in the coins that you want to be invested in, ready for maybe another pullback. Don't know if we're going to get one or not. But again, to reiterate from my previous video, I've been monitoring the 60K level, the $52,000 level, and the $45,000 level. For me, the perfect pullback would be down to 52K. That would be a very healthy pullback before then rocketing straight in to the next bull market in a fashion that where the altcoins really go up exponentially. And again, the best way to tell when that's going to happen is when Bitcoin definitively breaks this pi cycle long moving average on a weekly closing basis. And I don't mean just a little peekaboo above. I mean, Bitcoin really closes a candle solidly above this pi cycle long moving average. When that happens, you know that the bull market has really commenced and altcoins are getting ready to fly. The other thing is to understand that the cost of production for Bitcoin right now is $30,000. So until the Bitcoin halving, it's feasible that Bitcoin could correct anywhere down to $30,000. Now, after the halving, that cost of production doubles due to the nature of the halving cycles. So after the mid of April of this year, the production cost for Bitcoin is going to be 60K. And Bitcoin price has never definitively gone below the production cost. So in my opinion, the floor for Bitcoin, unless the cost of electricity and energy changes in April, is going to be 60K. So if Bitcoin is going to correct along with altcoins, it needs to happen in the next month. If we're a month from now and the halving occurs and Bitcoin has not had a major correction, I don't foresee Bitcoin closing any weekly candle below $60,000 because it's never happened in the past. That doesn't mean that it can't, but I don't foresee that happening. Now, again, that cost of production will vary based off the cost of energy and electricity. But right now, what I can tell you, it's at 30K. When the halving happens, it's going to be at 60K. So keep that in mind. Thanks for coming by. Hopefully you learned something today. I'll give you some tips on how to succeed in the bull market because I've had my own set of failures. If you're new here, please hit the subscribe button, the like button, leave me a comment below, follow me on X, and we will see you in the next video. Safe trading.